I don't want to be used by you. I'm so sorry for clickbaiting you. Ooh, sparkling water. Excuse me. Go green. Excuse me. I am so sorry for clickbaiting you guys. I think I'm gonna name the title like, how many views can this glass of water get? But it's actually a trading video. Get scammed, that's what you get. You shouldn't be... Never mind. But today is what? I don't know what day it is. I don't do days anymore. Today we took 6 trades. Today's what? The 30th of the whatevers. We took 6 trades and I lost 4, which is not good. But we we lost what? We lost 3 actually, nice. And we won 2 and we made 0 on 1. So 3 losses, 2 wins and 1 nothing. I'm not going to go over the charts, but if you can see, this first trade was part of the session that I've been trading in recently, and I made a decent amount, 1.2%, and then the session got reset, and it was trading in a range, so that's why I was probably losing a lot. But I'm enjoying trading in a range because I feel I'm the least good. I trade the worst in a range, and I mean, who doesn't? Trading in a trend is the easiest thing. A range is the hardest trading. But also I have pictures. So the first trade, you can see it right over here. It was a win. The first trade was a long. The 4 hour was bullish and the 30-minute was also bullish. It was a good trade. We entered a little bit late in the session, however, which is generally not advised because it kind of went into New York. Well, honestly, I don't think that's too bad, but it was a very good setup. So I took the trade and it was a good trade. It was entered based off of a 5-minute break of structure plus an inverse fair value gap. The session highs got retested quite late into the session, but we did hit 4 take profits about, and then it hit stop loss. So you see it broke, retested, boom, hit like about 4 take profits, and then we got stopped up around here in profit. The next trade on the new session, if you saw, it's not a continuation of this. Because it's, oh goodness, Athlone Stadium. This one was in the new session was a loss, and it was, we shorted. The 4 hour was bearish, had slightly bearish order flow, but it was really entering a range. The 30-minute was ranging. It was an okay trade. The stop loss got swept and then it kept going down, which I thought it would do. Maybe I should have noticed the 4 hour bullish fair value gap and the short-term trend. I honestly don't think so though, because there's a trading rule I'm going to go over that I added, which is involved in trading in ranges that I discovered. We entered on the 5-minute break of structure, inverse fair value gap, and I thought the bullish might be bias, but that's not how daily biases will work in a range. And here is the trade. Hey guys. You see, I tried to take a short right here based off of the inverse fair value gap and break of structure to the downside and the highs being interacted with. Almost hit take profit. It hit like it did. I think it might have hit over here, but I don't think so. And then we swept and then went a little bit lower. The third trade, this is where we didn't take a win or a loss. We made 0%, and it looks like I shorted. I shorted it, the 4 hour still ranging, slightly bearish bias. 30-minute was also ranging, slightly bearish, not really. I said it was a decent trade. It would have hit take profit if the stop loss, if the software had limit orders. But the session ranged for its entirety. We entered on the 5-minute inverse fair value gap once again, and a break of structure. So as you can see, this blue line here was my take profit 1, and usually where you set your take profits, so if price sits here, it automatically takes it out. But with this software that I'm back testing, it doesn't have limit orders, so I have to manually enter and exit each position. So it would have hit take profit 1, but it didn't, and then it just continued ranging, so I exited out at neither profit nor loss. Fourth trade, let's go to the loss. The fourth trade we shorted. The 4 hour was ranging, 30-minute was ranging. I said it was a bad trade. We took a short at the bottom of a range after an extension down. Entered on a 5-minute fair value gap and a break of structure. I got lucky with the small amounts as I used the same amount of lots as the previous session. However, it seemed to be giving less money. Like I entered off 2 lots in the previous session before of the backtesting software, and it used to give like 2,000 profit for take profit 1, but for this new session it only would give like about 500. So I just got lucky that it gave me small amounts on a loss. Luckily I discovered these on loss. Losses were minimized therefore. So as you can see here, tried to short because of this, but it was at the bottom of a range. So why would you short at the bottom of a range after an extension down? So our stop loss got swept and it kept going higher, which is why I added this note right over here. It says when trading in a, well, I don't know if I went over this with you, but I'm gonna say it right now. When the higher time frames ranging, it usually consolidates within sessions. When trading in a range, long at the bottom and short at the top. Okay, it just makes sense. Scale into the higher time frames to identify if it's the bottom or top or in the middle. In the middle, I mean, I wouldn't even really want to take it, but I would probably imagine a continuation in the direction that it is. This is, you guys want to understand this one. I'm not even going to try to explain it to you. Let your daily bias lag until it's invalidated by the market. You guys won't understand that. So the next trade we took was another loss, and it was a short. It was ranging. A very bad trade. I just made that note of short at the top and long at the bottom, and I took a short at the bottom, and I didn't wait for an extra break of structure after the bullish retracement. Okay, so it goes down, break of structure to the downside, bullish retracement, then which hits my confluence, which was the fair value gap in this case. Then I didn't wait for a re-break of structure for extra confluence. So yeah, we entered based off a 5-minute break of structure and a fair value gap. Right here, you see, boom, down, boom, up, and right over here we didn't wait for a re-break of structure to the downside, which I should have, and I should going forward. And I'm actually going to make a note after this video in the trading notes, and I'm not going to type it now because it's going to take too long. Our last trade was a little whimsical. I shorted again, 4 hour was ranging, 30 minutes. I said it wasn't a bad trade. I messed up the take profits a little bit. which I'll go over in the new rule. We entered based off an inverse fair value gap and a 5-minute break of structure. The new rule is if take profit 1 is less than a 1-to-1 risk to reward ratio, then make take profit 2 a 1-to-1 risk to reward ratio. I hope it's recording, yes. So the final trade, let's go all the way down right here. We took this small little win. Bruv, what's going on? Take profit 1 was at the top of this box here, and take profit 2 should have been here for 1-to-1. Then we could have had 2 take profits plus hit stop loss, which would have been in profit as well. But I just made that rule, and I didn't. I just made that rule after this trade, and that was the final win. And that's all, guys. I thought this would be a lot longer because we took 6 trades. Ooh, it's 10 minutes. Wait, go back. How does it go? Anyways, I need to make the new rule, so I'm gonna do it with you now. I don't even know what I'm trying to tab right now. I'm gonna end the video. I'll see you guys after.